Welcome to Power Charting. My name is Bruce Fraser, and this is episode number 16, which was recorded on November 15th of 2018 to be aired on November 16th of 2018 and thereafter. Our topic today is markets, natural gas, oil, and Apple. And I am with our co-host, Bogomazov. Welcome, Roman.
Thank you, Bruce, and as always, I'm happy to be here.
Let's get started. We have a lot to do. First of all, join us for additional content on Wyckoff. And there's a number of places you can go to get additional free content, which is my blog, which is at StockCharts.com. There's Wyckoff Education on our YouTube channel, which is the Wyckoff Trading Method channel, and go to our website where there's all kinds of great content at wyckoffanalytics.com. And if you would like to attend our weekly last bar analysis show, Wyckoff Market Discussion, which is a subscription offering, you can, and you have never attended before, email us and we'll send you an invitation to come to one of our sessions. So we'd love to have you there. All right, Roman, let's get started. So we're going to start with a discussion of the S&P 500 as our surrogate for the stock market in general. And here we can see really the all of 2018, and I can't imagine where the year has gone. Here we are near Thanksgiving. And so, Roman, walk us through what we're looking at here.
Well, last time we were discussing two possible scenarios. One was a distributional scenario, and another one was a rotational reaccumulation scenario. And I think that we still need to see a confirmation of one scenario over another. By the way, Bruce, yesterday on Market Watchers Live, which was on Wednesday, had an excellent presentation on the growth and value and how the rotation happens between these two investing schools. And I would highly recommend that. And that kind of goes along with this discussion. Is this a distribution or is this a rotational reaccumulation? Well, we walked you through a lot of the points here that showed that there was some selling. And as the price was going down into the area of the previous support from February, March, April, we saw how absorption started to happen. Price was going down, but the progression to the downside was not that great, and then the volume was increasing. This is the element of the effort increasing and downward result decreasing. So that shows some element of the absorption. From there, we called the rally, which was a really good call. And we said that we are going to have some kind of reaction, and we just needed to see what kind of reaction we're going to see, because by the character of this reaction we might make some assumption as to what's going to happen next. Well, as the price goes down and we're looking at the spread, at the price spread, these 2 days are probably the biggest price spread that we see. And look at the volume signature with which the price comes down to these levels. It's definitely decreasing, so we're assuming that the selling pressure is not as much as it was on the initial moves to the downside. And that gives us a little bit of a hope that we might have some kind of short-term recovery, or at least an attempt to retest the previous highs right here short-term. So we potentially looking at a couple of scenarios. We're looking at the potential trading range. That's number one, and we obviously trading range wants to compare it to the previous trading range where absorption has happened. And we want to compare these trading ranges and to see if there is some kind of similarities, and we'll walk you through this in a second. But the initial thought here is, Bruce, what kind of rally are we going to have next year? Would we come to the resistance point? Would we come to 1/2 of this range? Or would we, under the distributional scenario, just try to go up and then just collapse to the support? Bruce?
Well, markets are all about, and Wyckoff is all about the concept of testing. And so there is the testing of prior important lows, testing of prior important highs. You can see in September that the rally up into the final peak there before the decline was really a test of the January peak. And at that point, it had a very dramatic turn downward. As there's testing that's taking place even now, this decline into the late October low is in its own way a test of the March-April low and the February low. And so what we're always looking for is there are signs of exhaustion of the decline as it attempts to go down into an important low or rally into an important high. And so we're looking at this most recent decline and seeing the lack of volume as it goes down. There's volatility, there's widespread, it's attempting to go down, and then, and it's a little too early to tell, but then a reversal occurs, especially if it comes on low volume. The rally upward could indicate that a large, a base of sorts is forming. And as we saw, we will actually have taken point and figure counts of the April accumulation area, and we're able to project those upward into the highs that were made in September. Well, we're out here watching this current area and asking, is this going to conclude with an point and figure count where absorption has occurred and can give us a count to higher prices at a later date? And it could take a little more time for that to happen. Ramon?
Yeah, there are two more points here. I've talked about the volatility or decrease of volatility on this latest reaction. Look at the biggest spread right here. I'm repeating this a little bit, but this is an important concept. You know, look at the previous reaction and identify the biggest spread there. Look at the previous reaction and identify the biggest spread there. So you kind of could see that from one spread to another, we have the decreasing of the downward pressure on the price. So that's a good sign. The second point, which is also kind of interesting here, is that markets sometimes present fractal nature as how it moves. So looking at the first area of the absorption, we see that there is a stop in action after the big decline, first rally, and we see that here as well. And then after that, we see in a lower low as a retest, and we see that lower low here as well. Then the rally that overcomes the previous high. Well, on the Dow, we definitely see that rally overcoming that high, you know, because this is the leadership at this point. And then the next reaction to the downside that has, you know, decreasing of the supply, decreasing of the volume signature, creating the higher low. So if we have a reversal somewhere here, fractally, this area right here would remind us of what has happened in April and May. The only difference is that there is more volatility currently. So that's a very interesting kind of point here, Bruce.
The early May rally, you can see that it's different than the rally that preceded it. And also the reaction that occurred after that early May rally was very shallow, and we would describe that as a backup. And this would be a very important bullish clue that the market has been absorbed and is ready to march up to higher prices. And so these are all elements that have not occurred yet, and we would be watching for and would be very important to the evolution of this potential absorption area. And then the other part is that, you know, the markets are always attracted like a magnet to the lows. And so if the market continues to show weakness down to the prior low that was made in late October, that would tell us that there's still a lot of latent supply that is in the market that wants to come out. They're selling by large institutions, et cetera, that still is coming into the marketplace, and that would make us extremely cautious.
Bruce, I guess the last final thought on this slide and on the markets in general is just that we're still in the waiting mode. We need to see the confirmation of one scenario over another.
Yeah. Excellent. All right. And we will continue to follow up with these concepts in the weeks ahead also. This chart is from a blog that I just wrote a couple days ago, published, and this is on natural gas. The Natural Gas Fund, UNG, is been really interesting for a long time. And on the top chart on the left, you can see there that there is an accumulation on a very large scale that goes all the way back into 2015. And so there's a very big cause built in natural gas. Here recently, it came down and had a spring and a test of the important low that was made in early 2016, and then immediately responded to that by rallying back in to the trading area and back above the support line. And then it came down for a test at a higher low, and has gradually, in 2018, this has taken really much of the year, has gradually been building higher lows for what turned into an important launch from support right to resistance. And so here Ramon is marking up the daily charts where there's more detail that you can see. And in this little area, this green box on the weekly, is the area that we've highlighted on the daily chart. And you can see that there's an entire mature accumulation area that's formed on the natural gas, UNG, on the daily. And look at this run up to the resistance area, and then here's a classic example of a backup or a Wyckoff term last point of support. And that's a very bullish condition, and inability to be able to come back down into the trading range. It just hangs out up there and is waiting. And then look at the response. The response is just a launch up and out of the accumulation area and upward. Now, the big question is, how far can this move go? Well, we turn to the point and figure charts, and you can see I've actually put 3 counts here. And these 3 counts all have worked quite well: accumulation count, distribution count, now the green one, which is an accumulation count of the area on the daily chart. And it counts up as high as 4067, counts into a range of 3568, 4067, and that's exactly where it went to the day after the blog was published, on a very large, crazy rally with very high volume, which we would describe as being climactic. So Ramon, you have some thoughts about this?
Yeah, the volume signature is so unusual. Look at the daily chart. There is nothing of the sort that we've seen before. The previous instance where we've seen at least a volume spike comes on the rally as well, and then after that there is some kind of momentum continuation and a sell-off. We would look at the weekly chart and we would identify the same spot, and we also would like to look at the previous analogs of where it did happen before. And I think this is a really good analog at the end of the 2016 because it's at the resistance. So therefore, whatever supply has come in here, we would be analyzing it against the supply that has come back then at the end of the 2016. And it just tells us that this supply is significant. There is so much excitement from weak hands on this instrument right now, and you couldn't imagine how many emails Bruce and I are receiving, just on this topic alone. So there is a lot of interest, and into this interest by weak hands, institutions are selling, and we're seeing this from the volume signature. So that suggests that maybe we are either pausing here, going into a trading range. Maybe there's going to be some kind of attempt to retest, or after the retest, trading range, or maybe even just a retest and continuation of the reaction closer to the area of the support. Bruce?
Last thought on my part, and that is this very large bar, the last bar, is on very high volume, has gone right up to 2 forms of resistance. Now, because this is such a large short covering rally, always these early rallies have a big element of short covering in them, which helps to propel them so quickly upward. Well, now, because of the high volume and the very wide bar at resistance, I would expect the pause here to take time. And so this could be potentially a month or two, couple months, who knows? But once that's completed, now we would expect this to show up in the form of some kind of a backup where it just pauses, it doesn't move back down into the trading range much, maybe a little bit, but not a lot. That would be the bullish scenario. And then once you've completed that, then you can count all the way back to the selling climax in phases. We would count this in phases, segments, is that we could then take bigger counts for a bigger move. And it could take some time to set this up, but that would be the next activity with this, would be to take this point and figure chart and make a much larger count with it. And so stay tuned. I'm sure we'll come back and readdress this market again in the future. And so Ramon, okay, Ramon, you lead us on crude oil.
Yeah, crude oil has been an instrument of interest to Bruce and I for quite a long time. And, you know, we've been calling the P&F targets on oil for over a year now. And look how nicely our regional targets from their regional reaccumulation range right here are showing us where there's going to be some kind of stop in action, possible reversal. So target 1 identifies a potential buying climax, a change of character comes after that, which basically defines a non-trending environment. Well, because the instrument was very strong, so we have a non-trending upsloping environment rather than just a horizontal. Then look at the second target. The second target identifies an upthrust here. And by looking at how close the targets are, 62 to 66, 67 to 72, the second target suggests that we probably gonna have some kind of upthrust. There is not a lot of progression to the next target. So even from targets themselves, we could deduct that we are gonna be in the trading range at this point, and not only that, that the trading range could be upsloping. Now, our interest is obviously on the latest, biggest reaction that we have seen. And I think that if we have missed this trade, I think the key for us is to understand what's happening just most recently, especially on yesterday's bar or a couple of days ago. And we've seen that the daily spread is increasing. We've seen that the volume signature is increasing. So that suggests some kind of climactic action. Whenever we see that, we want to go to the intraday. And here we're using USO 60 minutes. And we want to see the acceleration of the climactic run to the downside, which we do have. We want to see the volume increase, which has climactic characteristics, and we do have that. And we also would like to be in the oversold condition at this point of time, and we clearly see how the price undercuts the support and creates that oversold condition. So these are the conditions for a potential selling climax or a stop in action. From here, we would like to see a change of character. And we've talked a lot at WMD about the correlation that most recently oil has on the markets in general. And obviously that's related to the world market growth in general. So oil acts a little bit as a confirmation of that growth, and we're seeing that in the world there is some shrinkage in the economy that or slowing down that we possibly could see. So we just want to see on the intraday basis for oil that we could produce some kind of rally, and that would give us that assurance that the markets could rebound as well. Also, one thing with the whole move is that we want to understand, have we concluded it? So going to the PNF, we are trying to identify the targets, and our target was at 54. So Bruce, very close call.
Well, the other thing about this crude oil point and figure chart, Ramon, is the volume that we're now starting to look at on point and figure. And I wonder if you could just take a minute and talk about the volume and how to interpret that on the point and figure chart.
Bruce and I, we've been enjoying this combination of the volume and PNF analysis, because it goes into the nature of the effort versus result. So look at how supply is being shown to us on the rally that overcomes the previous high, and we're seeing that the volume increase has some supply increase signature behind it. So that identifies the stopping action. And then on the next attempt to break out, we also see the volume increase. And therefore, there is some increase in the supply, because right after that, after what seems to be an upthrust action, we are seeing that the price goes down. So therefore, supply has come here, stopped the price from moving higher, reversed it, and now we are in the movement to the downside. So very, very useful combination of tools, Bruce.
So we will be doing a lot more work on volume on point and figure charts in the future, and we're very excited about it. Okay, so thank you, Ramon. That was excellent. And here, just an interesting development. This is Apple. This was actually two charts that were published back in September 17th of 2016. And this was a reaccumulation area. So you can see on the vertical chart on top that there's a beautiful uptrend. And this beautiful uptrend, and Apple has been really just one of the great campaign stocks of this bull market, resolves itself into a minor distribution. And so you can see there, and it's labeled, and you can see the on the point and figure chart that we have counted this area, and it counts down, and it missed the low by one box, and the at the final low area before, while it was reaccumulating itself. So that was a really nice point and figure analysis or a count that gave us an idea how far down Apple could go. Keep that in mind as we go forward, because we have another chart on another page on this point and figure charting. So here we have reaccumulation that formed back in 2015, and it started with a climax and matured. You can see the volatility coming out of Apple as it's being reabsorbed for another important move. Now, this is a campaign opportunity in Apple, and that was the reason that we published a blog on this. And you can see that each one of these swings up and down is diminishing. And finally, with a spring at the end, it's followed by a series of rallies and reactions to higher lows as it's working its way up. There's a couple of very dynamic bars. You can see bar number one has a nice volume characteristic, wide spread, good volume as it pushes up towards the resistance area. And then finally, another really good bar with very high volume that takes it to the resistance area. And so this warns us that Apple now is in strong hands and is being actively bought by institutions. So the next thing that we do is we go down here and we take a point and figure count. Now, we didn't have the whole count yet, so we were able to take a count, but we always keep an open mind about there being future columns that we could count at a later date. And so here we can see that we have two segments that to count. One takes us to 152, 159, and the larger count takes us 197, 204. And so this is a very important campaign potential, and you can see that Apple at that time, well, it was right around 112, 114 at the time of the blog. And so this sets up our campaign in Apple at that time. Ramon, any thoughts here?
No, but I wonder what happens next.
Well, let's see. So now so again, here is the completed count on the left point and figure chart, and you can see here that we have counted additional columns as the accumulation area completed, reaccumulation, and that gave us a count to 215, 231. So it was a little bit higher, but this doesn't change our tactics. Even though our prior count, which was unfinished, counted to 206, we knew that a major accumulation had formed and was preparing for an important upward move. And here, we just added additional columns as we were completing our tactics and our strategy for the rise in Apple, gave us a higher count, which we were happy about. And then notice this, that we get up into this area of the first segment of the count, and it forms a reaccumulation. And this reaccumulation is a smaller count. It takes less time to develop, and the count matches the count of the larger reaccumulation structure that's at the lower level. And so this is a reconfirming count. This is a very important concept. As a matter of fact, it's a timing concept, that when you have reaccumulation counting to the same place as the larger count below it, when those counts match, is the time when the market, or in this case, Apple, is ready to start to mark up again. So it's a timing, kind of a timing trick. So anyway, here we have something important that's happened, which is that Apple fulfilled its count in its campaign. And so now this is an interesting place, because here we are touching the 232 box on the count on the right, and it's formed a completed distribution count. Now this is a one box reversal. This is not a large distribution count. So this is not suggesting that Apple has a big distribution as though it's ready for a bear market. We just don't know. But we can see here that at the point at which distribution, or where the prior very large counts were fulfilled, Apple changed its character. It topped out. It formed some kind of a distribution of sorts that's on a minor scale, which says that there's selling taking place by institutions, and the count was completed. It gave us a count of 52 points. So we can see that that takes us down to 180 to 168. And so we haven't quite fulfilled that yet, but you can see now that Apple is on its way to fulfilling that count. And so these point and figure counts are working quite well. Rahman, your thoughts?
Well, I want to talk a little bit about the bias here for this distribution. So we're seeing this column with the high volume signature again. An increase in the volume signature would suggest that there is an increase of the supply as well. So that's what produces that stop in action on the buy-in climax. And then the next attempt to overcome this high comes on a slightly elevated volume signature. So what does this tell us? Well, first of all, we're thinking that demand is deteriorating. So the price only can go up one column, and then it comes back really quickly to the support area. Not only that, creates that small column down as a sign of weakness, and then all of the other attempts are just very, very weak without the demand signature. And I think that's predominantly what is happening in this distribution. There is not an extreme heavy institutional selling, but there is not a lot of buying, and that's why the price just kind of goes down. Bruce.
And now we would be looking for some attempt to potentially reaccumulate for another move up. We're completely open-minded, but we know that another cause needs to be built for another move. And so we're going to be very patient. And on that, Rahman, we are done. Thank you all so much for joining us. Thank you, Rahman.
Thank you, Bruce. Thank you all. Bye-bye.